Good afternoon, everyone. This is Pastor Devin Miller, the real pastor, the true pastor, bringing you another edition of Financial Matters. Why? Because financials matter. This is an opportunity where I bring on someone from the financial industry, a financial advisor, to educate as well as inform you on how to manage and take care of your money well. So on TikTok, you will only hear the audio, but on YouTube, on our Clear Faith Christian Ministries channel, you will see Mr. Toogood, who is our guest on today. So if you would like to see the video instead of just hearing the audio, I suggest you move from TikTok to YouTube and look up the Clear Faith Christian Ministries channel, and then you will be able to definitely see and hear what's going on. So I'm going to go ahead and bring up Mr. Toogood, and then we're going to go ahead and get started for this afternoon.
Can you hear me?
Yes, sir. How are you, sir?
Uh, how you doing? I'm good. I'm good.
Good,
Uh,
good. How's your
could be better, but no complaints.
day? I hear
It's
you.
good.
I hear
Yeah.
you. Okay, well, let's go ahead and jump into it. Again, we're talking about what you do in the financial arena, and I believe specifically in insurance, correct?
Yes, I do
Okay.
life insurance and annuities. So
And annuities.
they're both intertwined with each other, including Roth IRAs and debt solutions. So,
Okay. All
like,
right. Well, let's go ahead and get into the education of it all.
okay,
Uh, what First of all, let's talk about what the difference is between insurance and annuities,
no problem.
and then how each one can benefit the average family.
So let me start off with annuities. Annuities is more of like an investment strategy, a guaranteed investment strategy. So you don't lose any money. You can, but there's a product that I call index guaranteed annuity. That is when, number one, you don't need a health assessment for that because life insurance is based on your health and age. So you could always get qualified for life insurance, but you also can get declined based on your health history or what health you're going through now. But I could always run around that. With annuities, there's no health questionnaires. It's more of what you're trying to do. So when I do annuities with a client, it's more so of their 401k plan. Like, what are you trying to do with it? Because if you're trying to do something smart with your 401k plan, it's more to roll it over into annuities. So that way, before you turn 59 and a half, you don't have to pay that tax penalty, which is more like 25% of it, which I don't think that's fair because you worked all your life to get that money and now you're getting penalized for it. That's not fair.
Right. Right.
So a lot of people, if they know the education of it, they'll roll it over so that way their money turns into their own income. You know what I'm saying? So if somebody has 500,000, you can roll it over. It might go up to 1 million, and then it turns into instant income every year.
Right.
So
Okay.
some clients that have they do like 6,000 a month every year off their annuities, but that's just that's just an example. What you
Sure.
doing?
Sure. Now,
Now,
go ahead.
go. What's your question?
No, what I was gonna say was one of the things that when I talk with couples in premarital, we do a piece on finances. And in that, I always try to let people know that they should have a private IRA, or in this case, maybe a private annuity that if they go from one job to another, they can roll their 401 into instead of leaving it with the company that they're leaving.
Yes.
I had somebody say earlier today, they're saying it's like leaving your money at your ex-wife's house. You know, it's like you don't work there no more, but your money is there. And so, would you recommend that people who move jobs that they have a private IRA or have an annuity so that they
Yes.
can roll the 401 from the previous job into it?
I believe you should have everything private when you're, even if you have a job, whether it's life insurance, annuities, or Roth IRAs. Because what happens is if you get terminated or anything happens, you don't have it anymore.
Right,
So God forbid something happens to you, you don't get nothing.
right.
So what people are not understanding is your pensions and your social security are becoming depleted.
Mm-hmm.
So I don't know if a lot of people know what that means. Because when you retire, if something is depleted, that means you're not going to be retired long enough. You're going to have to come back out of retirement to work extra hard to make the money that you need to live.
Right.
So this is where annuities, life insurance, and all that stuff comes to play. If you have life insurance, I always tell people it's better for you to have life insurance on your own or annuities on your own because, God forbid, you do retire. You don't have to come out of retirement. That's your retirement plan right there because you turn it into income. You take whatever
Right.
money out on your own. And you don't have to wait till to pass away. You can see your money like as you're living. You can
Right.
see what you get as you're living. See, a lot of people say they have life insurance, but they don't have the more updated one.
Mm-hmm.
So that's where that comes to play as well. Because a lot of
Right.
people I speak to, they be like they have life insurance, they all set. But then they wonder why they have to wait to pass away to have their family take care of, or it goes through a lot of issues for your
Right.
family to get their money. No, if you have updated, you get accidental, critical, chronic, terminal, um, and there's one more benefit for it. But when you have those four, God forbid you have dementia, Alzheimer's, cancer, or you get into a car accident, you get a lump sum of your money and you still have a death benefit to leave your
Mm.
family with.
Okay.
You know what I'm
Okay.
saying? So,
Yeah, because a lot of people, and I've been seeing advertising about it, but a lot of people don't know that you can actually, if you're paying in, you can actually borrow against, but not mess up your death benefits. And I think
yes,
that's been the confusing part because people now, you know, around my age are getting it just for the death benefits, you know, to make sure that their death benefits are covered with a little extra. But you're
yes,
saying that you can actually lean against a little extra, but keep the death benefits intact.
yes. Because what's that called? It's called your retirement plan.
Okay.
You know what I'm saying? So, a lot of people, like, I speak with around 50-year-olds or more, they didn't know that like you do an IUL or you do a term policy or you do a whole life policy that your money accumulates over time. So you could
Right.
have $100,000 death benefit, right? But then like when you turn 65 or 75, you accumulated 80,000 that you could take out to buy a house or whatever and still have $100,000 left in your debt benefit.
Okay.
But you don't even have to take it out. You could turn it into income where you have it set up to where it pays you every month
Right.
of whatever you want it to be. Like if you want it to be 6,000, 4,000, it pays you every month.
Right.
So you can do that. So you just
Okay.
gotta. And I always tell this to people like life insurance is not just about the death benefit. Life insurance is about protecting your family and your
Mhm.
loved ones now, so that way Like, God forbid, you get into a car accident. You don't die. You
Right.
still walking, but you're not able to work anymore. How do you provide for your family then?
Right.
So that 500,000 that you paid for in your life insurance policy, you could probably get up to 450,000 right there as a lump sum and still have your 500,000 for death benefit to leave for your family, the burial and cremation, and whatever you want to do with it afterwards.
Right.
You know what I'm saying? So you just gotta know, and you have to sit with the right agent to
Right.
teach you that.
Right.
Because a lot of agents, like I said before, their only mindset is to sell these products to you, and then don't care.
Yeah.
So for
Okay.
me, I care. Like you
Sure.
have to
Sure.
understand
Now, are you able to do that on term life as well as whole life, or does it have to be whole life?
both. Doing
Both.
both.
Okay. And
Both.
is there a certain threshold as far as amount that you have to buy in order to be able to do that?
No. So the minimum threshold is 50,000.
Okay.
50,000 is the minimum. You're in Texas, right? So I only
Yeah.
do two companies, which is Foresters and National Life, because
Okay.
they give the best benefits.
Okay.
So you get five benefits or six. So all five or all six, you're covered because now anything happens, you get paid out.
Okay. Okay. So with that, is what proof do you have to show in order to get that benefit?
No proof. You just gotta make sure that you're healthy, and you just gotta have proof that. See, I do non-medical, but sometimes when you submit a non-medical,
Hmm.
sometimes some people have to go and get a medical,
Phys-
a
right.
physical exam with a paramedics, or they go to their own doctor and do
Okay.
everything because sometimes you might have something in the history
Right.
that you can't fight. You just gotta deal with it. Like
Right.
for example, for me, I gave my kids a $1 million policy. Right?
Mm.
I'm paying probably $70 a month, $100 a month for it, but I had to go through this where I didn't know I had strokes in the past and ellipsis. I forgot to say it. Ellipsis strokes in the past.
Okay.
So I had to do paramedics came to my house to do. They asked me questions. They took my blood. They took my urine sample. They asked me 5 questions and that's it.
Mm.
And
Okay.
and then a couple of days later, your policy is active.
Right.
So
Okay.
and what's the best part about it is your term policy can convert into whole life.
Right. Okay.
So a lot of people just think that the term policy is the term policy. So you're gonna be stuck with a term policy,
Yeah.
convert it into whole life, so you get a better rate at probably the same price.
Right. Right.
You know what I'm
Okay.
saying? So
Yeah. And so it would be your recommendation when you work with clients, it would be your recommendation that they get whole life versus term life?
it depends.
Okay.
I'm not gonna lie, it depends. Because I'm all about knowing what your expenses are and
Right.
what your
Okay.
situation is.
Right.
So if the best bet is for you to take a term just to manage your money better, take a term
Hmm.
and then convert it within the next 20 to 30 years
Oh,
when you
oh,
when you make the money. You know what I'm saying?
right.
So that's my best bet. But
Sure.
if you're looking for a complete lifetime payment, go with whole life.
Right.
There's nothing wrong with it. It's just
Hmm.
one is completely 100% and one is you have that price set for 20, 30 years and then convert it.
Okay.
It's just
Okay.
that the term is cheaper than whole life.
Okay. Okay. Because it's a limit.
Yes.
Yeah. Whereas whole life is for the
Yeah,
whole day.
yeah. So whole life is more expensive because it's literally like you're paying for that for the rest of your life. But
Right.
it's also, of course, it carries more value.
Right.
Your term is more of you're you're paying that set price like $50 a month for 500,000.
Right.
Is just holding that 10 to 30 year price level range for you. But when
Hmm.
you convert it, you're gonna see all your money that you put into that policy convert. So that 100,000, that 500,000 could turn to 100,000 of whole life, and you see all the money that you put in it for 20 years accumulated to like 100,000 for you to play with.
Right. Okay.
I'm saying
Okay.
so. You have
Okay.
with whole life, you have accumulation and you have the debt benefit. With term,
Right.
you just only have the debt benefit right there for like 20 years, and then you're gonna see your accumulation come
Right.
once you convert it.
Got it. Got it. Okay. Okay. All right. Well, I'm sure that what you're sharing is extremely knowledgeable because I just today had a call with a financial agency, and the first thing that they were pushing, which I really don't like, but I let him do his job allegedly, was two things: either trying to get me to become a broker because I quote unquote know so many people, or trying to sell me a policy. And I was trying to tell him, much like I told you, it's like, look, I'll bring you on my podcast. I'll let you share your information as long as it's education. And then, if anything comes of it, that's fine. Because, I believe that not everybody has to do everything. Your expertise is that. Why do I need to learn it? I just need to know you, and then if I get somebody, then refer them to you. And
Yeah,
I know because we've talked, you're going to do right. And that's why I do this, is to make sure that the people who are out there, number one, get a platform, to be able to talk to other people, because I don't know who is watching. We got two people watching on the podcast, I mean on the YouTube channel, but I don't know how many rebroadcasts that people, who go to my page will see it, and then want to get in contact with you or whomever I have on the page, because we don't get this education.
yeah,
We get people that just come to us, make it sound good, and then we like, okay, well, it's something we need, so I'll just go with the first person that comes along, as opposed to shopping around, because there's plenty of insurance companies, annuity companies and all of that we don't
yeah,
have time a lot of times to seek and search out. We
yeah.
always go for the cheapest and the coverage,
Yes,
and
but
so go
here's the
ahead.
thing. Here's the thing about that. There's two things wrong with that. Well, three things.
Mhm.
I apologize for that financial about that agent that you met with. You wasn't thinking the proper way. That's number one. So I don't do bad. I don't talk bad about anybody. It's just
Right, right,
when you do sales, you're not doing the proper way of doing it.
right,
You gotta
right.
educate them, make them feel comfortable, create that trust. Cause when you create
Hmm.
that trust, nine out of ten, you don't get a charge back.
Yeah,
You with that client for life, because if God forbid something happens to that client that you have to be able to bring that family the money that they pay for.
right,
You can't just be like, oh, this what it is. No, you have to bring that family the money.
right.
That's number one. Number two, I always say this, and I say this very as best as I can. It's not about the cheaper the price, because
Hmm.
you can sit here and pay $20 for 100,000. You can do that,
Yeah.
but what is that money doing for you?
Hmm.
But are you ever gonna see it?
Right.
like, and then once that 20-year ends, it's no longer 20 hours. You just wasted 20 hours into a policy that has done nothing for you.
Right.
You know what I'm saying? And it's
Yeah.
you gotta also understand the the thing is you want people to understand that, like, yes, you could go to multiple different companies. Why? Why would you
Hmm.
want to sit with different companies where I'm an agent, I'm an independent agent, I have connections with all these companies that you could go to. It's most likely gonna be cheaper with me. And I'm gonna give you the best deal and the more understanding deal where your money's gonna be worth everything as well as your financial situation gets better.
Okay.
Understand? That's the
Yeah.
job. That's the job I have. It's not about doing sales. You gotta help the person because I could charge you $50 for that policy, but what if that $50 hurts you and your family?
Hmm.
Does it make sense to do it?
Right.
No, because then that policy is going to elapse.
Hmm.
And now you're back to square one, shopping around. And that just makes it look bad on you because when they're shopping around, putting all these applications for different companies,
Yeah.
you make yourself less insurable.
Okay. Okay.
And then
That's
when you're less insurable, we can't help you.
right. So that's a good point because that's something I hadn't thought about. So if you are in the if you're in the market for looking for life insurance and either you go online or people approach you, is there a system that tracks how many times you've gone to different places?
Yes,
Okay.
it's called MIB, Medical Insurance Bureau. So every time you put in an application, every company gets that notification, get that information that you put in because let's say you apply to Transamerica, that's one. You apply for Mutual of Omaha, that's two. You apply for Foresters, that's three. You
Hmm.
apply for America, that's four. Now I'm your agent, right? I do your finance analysis to see what I can help you with. And then I put in national life application for you. All that companies that you applied with and put an application in, I need answers for.
Mm.
I have to figure out when you applied, what happened here, why you got declined, why you didn't go through with the application or this policy. Because
Right.
now instead of you not getting a non-medical, you have to do paramedics.
Mm.
And after the paramedics, you never know if it's going to be approved or not.
Right.
So now you put yourself in a harder situation than you needed to be in.
Right.
You know what I'm saying?
Interesting. Okay. Yeah, because I don't think a lot of people knew that part. Well, I didn't know it. That's why I'm asking. I didn't know, because it is a competitive market, but yet
Yeah,
there's some regulations, is what you're
yeah,
saying, that every insurance company has to know.
yes. So like that's why when a company declines you, they say please reach out to the MIB department. And that could take
Okay.
7 to 10 business days for you to even reach.
Yeah.
So now you're going through a whole process just to get back probably like 60 pages of your history.
Right.
And then at the end, it tells you where all the companies you work with that you went to. And
Oh,
now that company might not want to take you because they be like, you're not gonna keep this policy for no longer, so why would we take you?
the
You know what I'm
risk.
saying? Yes.
Yeah.
So you become risky.
Right. Okay. Okay. That's good to know because I mean, a lot of people may not know that part because they're just shopping around.
Yeah.
and not knowing that it's accumulating over, each time you apply, it's accumulating to someone else. I think we lost him. I think he'll be back.
No, I'm
Oh,
here.
there we go.
I'm,
Okay. So yeah,
so
so that's interesting. Okay. So
yeah.
you're considered a broker.
Yes.
Okay. So is it, would you say, let me say it this way. Would you say it's better to go through a broker than to go individually because you have access?
It's better to go with the independent agent that has all the assets with all the companies rather than just one company.
Okay.
This is better that way.
Okay. So what is that benefit? Because you are able to shop around with one person versus the person shopping around with a bunch of them?
Yes. So like for example, right? For example, me, I'm an independent agent, right?
Right.
I work my IMO is Experian Financial. Okay.
Okay.
My IMO is Experian Financial. They're my IMO. They're my parent company. I have my own company under them, right?
Okay.
But while I have my own company under them, I'm also contracted with hundreds of different companies that you could go to, but your price is
Okay.
going to be expensive rather than with me. Because if you go to
Okay.
Transamerica and you get 250,000 of term policy, they might charge you $250 for it. But for me, if I do the application for you, you probably get charged $90 for that.
Got it.
You know what I'm saying? So
Right.
it's better for you to go with an agent that actually knows what he's doing.
Mm-hmm.
That's what I say. Don't go with a company. Go with the agent that knows what they're doing.
Right.
That will sit down with you, do the financial analysis, and dissect your expenses to help you get the best policy for you and your loved ones.
Got it. Got it. Okay. Okay. All right. And you've been doing this for how long?
2 years now.
Okay. Okay. So what are you seeing in this economic times that we're in? What have been some of your challenges and what has been some of your rewards?
The challenge is more so of finding trustworthy people. That's the
Mm.
challenges of it because you do come across people that is shopping around, but they don't want to be honest about their health.
Okay.
So then, like when you put in the application, you're looking to get paid or whatnot for helping this client, and then it comes back 1,000 things wrong.
Right.
That's one. And then the challenging part about it is the consistency of the payments that come.
Mm.
Other than that, because not everybody is trustworthy of doing the right thing.
Right.
So
Okay.
that's what that comes to play. But other than that, the pros of it is you're making all the money. There's no taxes on it. And you also have you have flexibility time for your family and stuff like
Right.
that. So
Okay.
yeah.
Okay. And you
And
have a
you
young
want
family, right?
huh?
Yeah, I said you have a young family.
Yeah. Yeah. I have 3 kids. Um and a wife right now.
Okay. Okay.
Power on.
Well, other than that, it's just more so of just building the team.
Mm. Okay. So you have people working under you?
I have been working with me. I don't do
Okay.
under me. I have been working
Gotcha.
with me.
Okay.
I have
Okay.
25 agents that I manage and help, but it's all like if they do well, I do well. So it's all about a reflection of how you train people.
Right. Okay. Okay. So if someone wanted to get into, your line of work, what is the process?
First process is training. That's
Okay.
number one. Yeah. Come. You do training, and then you have training 2 times a day. I mean 2 times a week, and then you take a course. The
Okay.
course is $29 to $35. Gotcha. Good job. Mhm.
Well, when you got kids, you got to take care of the kids.
Yeah. Yeah, I know. I know. Hold on.
Being a dad don't stop.
You got it?
But I think,
Yeah.
yeah, go ahead. I'm
Yeah.
sorry. I was just filling in while you was taking care of your family.
No, it's okay. That's that's my son. He just need help. Other than that, it's literally like if you want to join the business, always work with the team. Don't
Okay.
work by yourself because you're gonna put yourself through a drought. And I'm telling you this from experience.
Mm,
Because when you work by yourself, you're gonna realize that like you gotta have a period like with the week when you're not talking to anybody. You're
right.
not making any business. So now everything becomes harder on you because
Right.
bills start to pile up.
Right.
So it's a grind at the same time.
Okay. But you're saying the more you build the team, the better it is for everybody.
Yes,
So are all the people that are under you, are they all independent contractors?
yes.
Okay. 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 All right. Okay. Well, I think that's a good enough information for today. So when we get together next week, we'll talk about the nuts and bolts of the training and what you learn and how to get in contact.
Okay.
All right. All
Yes.
right, ladies and gentlemen, this has been Kai Toogood, and we appreciate your time and your expertise, sir. And we look forward to the conversation again next week.
All right. Thank you, man. I appreciate the platform.
No problem. Thank you for the information.
No problem, man. Have a blessed night.
All right, you too. Take care. All right, folks. That now there was some stuff on there that I didn't know. Not that I'm trying to get into the insurance game, but I didn't know that there was that connector with all insurance companies when you apply. And a lot of us, especially at a certain income level, we want the best for our dollar, and so typically we would just shop around, but that shopping around can go against you um, if you're putting in applications everywhere. Now, it's one thing to get the information, is another thing to put in the application and then decide not to and all this kind of stuff. I got caught in that, but it was on their end, not mine. I had, and I'll put their name out there. I don't care. Aflac called me, and I was like, I already had an insurance policy, and so I was like, well, tell me what you got, and let me talk to my insurance agent and see if they can beat it. Well, they couldn't. I mean, they could. They beat it. So I called the person who was pitching to me, and I said, "Hey, I don't need the policy. Thank you for the information, but I'm gonna stick with who I got." Well, I got several calls after that saying, "You put in an application for a policy." I said, "No, I didn't put in an application. I put in an inquiry, not an application. I did not sign anything. I gave you the information to give me what you have for what I'm looking for. But they took it, and this is why you want to be careful with Aflac, I think. They took it as you applied. And so they kept calling me saying, "Oh, you've applied and blah." I said, "No, I called your guy back and said I didn't want it. I didn't apply. I said, based on me checking with with the person I had, I don't need what you have." But they didn't take that. So you got to be careful with your words, is what I learned is because I should have said, and I thought I did, and I think I did, but I said, "Let me get back to you," as opposed to, "Where do I sign?" Because they didn't send me any paperwork. And so I didn't make any commitment, but they took my inquiry as commitment. And so you got to be very careful when you are looking for a good policy for you and your family, especially now because everybody's hawking. Everybody's out there trying to get one, and so you want to be careful when you get these solicitations. Don't make no promises, because if you make a promise, they'll take it as an application. Not, if you say, "I'm interested," let me say it that way, they'll take it as application as opposed to just interest, because everybody's out there looking. So the other part that was interesting was to get a broker as opposed to get an independent broker as opposed to going with a one company, and then going after companies. Go after a broker who has access to companies, so that you're cutting out the legwork and working with one independent agent. So that's very important too, because that's what I did with the insurance that I have now. Is he was a broker, and he found the best policy for what I was looking for, and that's what you want. You don't want somebody that's trying to sell you a policy. You want someone who wants to educate you on the policies that are out there and give you the best value for your dollar. Okay. All right. Well, that's it for today. We only stay on till 5:15. So if we get done early, we let class out early. But I appreciate those who came in and came through. Hope that you got some good information. And on next week, we will be talking about the nuts and bolts of becoming an agent, if that's something that you're looking to do. Um, Again, I had a conversation earlier today, and it's like, you could be this and you could be that. I'm like, no, I know who I am. And I don't hawk like that. I educate and I move on, but I connect people who are in that business, and get them with the right people. And that's why we do this broadcast. This broadcast is to give you the information, so that you can make wise decisions when it comes to your money. Why? Because financials matter, and that's the name of the show. So we're gonna get up out of here. We have our teaching tonight at 8:30 Central Time. A candid conversation with Pastor D on TikTok, and a candid conversation with Pastor Devin Miller on the Clear Faith Christian Ministries channel on YouTube. So, if you would like to be a part of the ministry, Clear Faith Christian Ministries, all you have to do, TikTok, is join our channel on YouTube. That's all it takes, and to be a part of the virtual church. And so, please, ma'am, please, sir, if you're looking, feel free to go ahead and join. It doesn't take away from the church you may go to, but I will guarantee you will get some teaching on from this church, because that's all we do, and we strive to do it well to the glory of God. And so, join us tonight at 8:30 Central Time. We're studying from the book Knowing God by J.I. Packer. And it's been powerful every night since we started. And so you don't want to miss, if you can, what we're going to be teaching on tonight. All right. So, Preacher Boy, God bless you, sir. We're going to go ahead and close out with prayer, and then hopefully we will see you and a friend or two tonight at 8:30 Central Time. Father, we thank you for the knowledge that we have learned and gained on tonight. We thank you for Ty Toogood and what he is doing to serve uh, through his purpose to the kingdom. Father, we pray that you continue to bless him, bless his family, as he strives to ensure people through education, not just through finances. God, we thank you for this broadcast. We thank you for those who came in, stopped by, and stayed a while. Now, God, as we leave and prepare for our broadcast on tonight, we ask that you continue to walk with us, continue to lead us and guide us to that place in which you would have us to go. We thank you, we praise you, we magnify you, and we adore you. It's in Jesus' name that we pray. Amen. All right, folks. Thanks again. And until next time, may God's richest and greatest blessings be yours. Peace.